Welcome to another vlog here on Wolf of Dubai, your investing channel for the stocks and stock market and also other business news, financial news and so on and so forth. So thank you very much for watching, and today we are talking about the biggest luxury group on the stock market. It's called LVMH and stand for Louis Vuitton Moet Hennessy. It's a French company founded by Bernard Arnault, the second richest guy in the world, because he built an empire so big. If you are more interested, we will dive into it, so make sure to not skip this video because we are talking about the earnings that they just released, and you know, the stock jumped 5%. They had super good numbers, so let's dive into it.
Wolf of Dubai.
So first of all, make sure to subscribe and thumb up, smash that thumb up button, because I'm vlogging daily. It's very hard work, and I appreciate every subscriber here to grow this channel, to grow this community. And if you want to be a better investor, make sure to do that right now. So we are talking about the biggest luxury group out there on the stock market, and they are based in France, where they have their headquarters. So basically you can trade this company on the European stock market, though it's a very interesting stock if you're looking for something more defensive, slowly growing. You know, it seems to be a well established company, family owned, you know, family orientated. If you want to know more about this company and the founder Bernard Arnault, who is the second richest guy in the world, make sure to check out in my channels on the videos. I make a full vlog only about the history about this guy and the company. It's very interesting. So they just released their Q3 earnings, and they are growing very fast, more than expected, actually more than the market expected, especially, you know, in these times where we all think, you know, is a recession coming or not. You know, people tend to, you know, avoid luxury items as primary things to cut from their, you know, expenses, right? So seeing this company further growth, especially in this year, showing that, you know, it seems that, you know, the people love to still buy this expensive goods, and it shouldn't be so bad. But however, I don't want to have this one factor and, you know, characterize how the economy is, because this would be not professional. However, you know, they grow 11% this quarter over quarter, and they did just 13 billion euros revenue, which is outstanding. You know, this company makes around 50 to 60 billion revenue and growing 10% in this kind of, you know, not as a growth stock, not as a technology stock. Very interesting growth numbers. So definitely here a good portfolio that they brought up. You know, the drinks department, so the alcoholic drinks like, you know, Moet or different champagne or winery brands that they have under the whole roof of LVMH. They are growing very fast in that, and also, you know, their fashion department grow very well. So this seems to be very well established, even though their most important market is the Asian market. Why? In China, and believe it or not, every week there's 2 new billionaires out there in China. So you can imagine that maybe it's not the biggest revenue market per se, it's the fastest growing. Therefore, you know, and not only even in China or in Hong Kong, with this turmoil, it's something very good for the company that they're still growing. But also, you know, Chinese tourists, they are going to London, they're going to Paris, they're coming to Dubai, and then they are buying this kind of goods. And so the overall company, so very good growth numbers in US, Europe and Asia as well. And you know, this company built over 30 years ago by Bernard Arnault. He is still holding 47 percent of the company, which is, you know, huge considering the size of the company, which we will go later on when we look into the stock, how is the market cap and so on. You know, this company is basically, you know, everything was what is in the luxury field, especially family owned. They are very, very much interested to acquire and build up their portfolio, you know. So their portfolio is also very, very diversified. So they don't have only, let's say, wines or drinking products. They have perfumes, they have, you know, fashion houses, you know, like Louis Vuitton, you know, all these brands are considered to be under the house of Louis Vuitton, Moet Hennessy. And also, you know, they having also watches, you know, they are, for example, they are owning Tag Heuer or Hublot as well. So very much premium brands, luxury brands that, you know, fit into the portfolio. And also, you know, the management is basically pretty much their own family. So he keep it everything as a family business, because he having these principles that, you know, putting your family, you can think long term, right? Because if you're having your children engage in the business, you can engage them for 30, 40 years, and you can plan very, very long ahead. And there is an interesting conversation happened once between Steve Jobs and Bernard Arnault, where Steve Jobs actually said, like, I don't know if people will buy my iPhones still in 20, 30 years, but I definitely know that they will buy your Louis Vuitton bags. So let's have a look also what else is interesting that they just released. So they are expecting average growth of more than 4% every year until 2025. So the next 6 years should be stable one-digit growth, which is great. And especially this luxury items that they are selling, you know, obviously with very good marketing, very good quality. You know, quality is one of the pillars of this company, core values. So what they having with quality, you can also ask for higher prices, and this brings obviously higher margins to this company. This company has on average 20% margin on their products, which is, you know, fantastic. And over the last 20 years, since they pay dividend as a defensive stock, I think it's brilliant to put it in your portfolio just to add up. Though when we go look into the stock later on, we will see that, you know, this stock went crazy this year. Okay, so let's have a look into the dividend, which is around 2% steady growth, and always either kept and paid or increased over the last 20 years. And there's not much companies out there that can state this. So very, very much stable, and, you know, very much defensive stock in your portfolio if you're putting this into your stocks. So actually, yeah, this is all what we got from the earnings report. So let's dive now into the stocks. But before that, make sure to subscribe and thumb up this video. Thank you very much, and let's dive into the stock. Alright, so having said that this is more or less a defensive stock, the growth of the stock this year is ridiculous. Alright, so let's have a look. So you can buy one stock of LVMH for 374 euros per share. Year to growth, so only this year they grow 40%. So actually, being the CEO and 47% shareholder, which Bernard Arnault is, he went up to the Forbes list as second richest man, you know, holding 47% of a market cap of 189 billion euros. This is huge, guys. This is really, I don't see a comparison out there in the stock market where the founders still have so much stock. For example, just to give you let's say a combination or a comparison rather, it's Elon Musk who is also the founder of Tesla. He owns about 20%, you know. So Bernard Arnault has 47% of this company, plus, you know, he's apparently extensive collector of art, you know, or high-level art, obviously. And so this brings his net worth very much under on the Forbes list, and that's why he just climbed the second rank this year. And if you're looking into the PE ratio, obviously due to this climbing of 40% this year, the PE ratio is quite high. So it's 30. So considering that, you know, the stocks beginning of this year was 40% less, you know, we was looking at the PE ratio of 18, which is, you know, attractive for this kind of steady growth company. But now it's a little bit, you know, let's say on the higher side, I would say, you know. So that's why it's for me, it's maybe something that to put on the portfolio where you want to say, okay, I have, you know, a couple of growth stocks, I have a couple of dividend stocks, and I have this, you know, defensive stocks that definitely grow every year, 4, 5, up to 10%. Even you know, they claim to grow 1 digit, but this quarter, with this, you know, all the turmoil in Hong Kong going on, and also with all the turmoil about the recession and slowing economy going on, they grow more, double actually, than expected. And you know, this was a great way for investors and, you know, people who didn't expect it. That's why the stock is up 5%, which is really good. So let me know what you think about this stock. Make sure to watch other videos, and the other video for LVMH, I can just recommend it to you. And see you tomorrow, because I'm vlogging every day. Thank you for watching, and have a nice day, morning, afternoon, wherever from you are watching. Thank you very much.